Now, I know this is going to be an extremely unpopular video because it's going against the grain here and going against the general sentiment of the investing community. So guys, I'm going to ask you right off the bat to hit that like button down below to offset all the haters that come here just to dislike the video without even hearing out what I have to say. So support me on this one, drop a like down below, and let's get into it. Just this past week, we saw headlines like this saying we are back in a bull market. And this is technically true because a bull market is defined and begins once we climb 20% or more from the lowest part of the previous bear market. And as you can see here, we are currently up almost 25% on the S&P 500 from the lows that we hit back on March 23rd. And now looking back, March 23rd could very well be the bottom of the sell-off, which we discussed in a previous video that I made. So make sure to check that out as well once you're done watching this video. Now I will be making a follow-up video on this in the coming weeks and months if you guys want to see that. But once again, we're really going to have to wait for confirmation that that was indeed the bottom. But the crazy part is that if that was the bottom, guys, what we just witnessed and went through was possibly the shortest bear market in history. On average, out of the 24 bear markets that we've experienced in the last almost 100 years, the average drop has been around 33% until the market bottomed. And guess what? During this historic market crash, the S&P dropped just under 34%, which is pretty much exactly in line with what the average has been historically. What are the chances of that? Well, pretty high because this average, like I said, is over 24 bear markets. So it's a pretty accurate estimation, in my opinion, of where the bottom would be. Now, I can't even imagine how many of you are sitting out there just thinking, how is this even possible? We just saw that jobless claims, meaning the amount of people that filed for unemployment in just the past week because they got laid off, hit 6.6 million. And this brings the total since this global issue took hold about 3 weeks ago to a total of 16 million individuals who are now out of a job and need to rely on the government for income. What's worse is that we're currently actually setting records here. Even during the last recession, the Great Financial Crisis, we did not see unemployments anywhere near this level. You can see from this spike just how bad things are right now and how many people are currently out of a job. Yet the market still keeps going up, and we've entered another bull market. The US is now by far the country with the most number of reported cases, and this is by a huge margin, guys. As week after week, we see numbers continuing to climb. Things don't seem to be getting better, and in fact, we have no idea when this will actually end. Yet the market still keeps going up, and we've entered a new bull market. Many companies in the S&P 500 had begun to either cut their dividends or suspend their dividends, and this is because they are struggling to keep things moving, struggling to keep people employed, and struggling to pay off their liabilities and debt. This is putting them in a tough financial position, which resorts to them cutting or suspending their dividends. Yet, the stock market keeps going up, and we're in a new bull market. How does this make any sense? And how can we as investors really understand what's going on right now? As many commenters say, it doesn't look like we're out of the woods yet. Now, I don't know the exact answer to this, and in fact, no one does unless you can see into the future. But what I can tell you is this. The stock market is not a reflection of the economy today, but in fact, it's an indicator to predict what the economy will look like in the future, say 6 to 12 months from now. So many investors, and I've seen these on the comments on my videos, mistake the economy for the stock market and say, well, things look bad in the economy, why isn't the stock market going down as well? It's really critical as an investor to understand the difference between these two. The stock market is what's known as a leading indicator, meaning that it moves up or down well before the economy does. It leads the way in a sense, and the economy generally follows, but not always. So here's a really good example that many of us have been through. Look at October to December 2018. Many of us were investing during this time, and it was the most recent example of a 20% drop that we saw. At that time, the stock market saw some potential turbulence in the coming months, and as a result, it corrected 20% in the span of 3 months. Many investors at that time sold out of their stocks and packed it in and said, this is it, we're entering a recession. Well, guess what happened? The market was wrong, it realized that, and the 20% drop we saw was quickly recovered in a V-shaped recovery soon after. Things continued then chugging along throughout 2019 and into 2020 until we hit February this year and went through the most recent crash. But here's the thing, after that 2018 correction, things continued to grow fine, the economy was fine, things looked strong, and we carried on with record low unemployment rates. Remember, the stock market is not the economy, and it tries to make predictions on what the economy will look like in the future. Sometimes it's right, sometimes it's wrong, but what you need to understand as an investor is that all it's trying to do is just predict what it thinks will happen to the economy in the future. Now, many investors, including myself, took the opportunity in March to average into incredible businesses at incredibly suppressed prices during the crash. I've made quite a few videos on purchases that I did during March, and even some here in early April, and if we continue to see value, I will continue buying. By the way, guys, I post all of these trades in my VIP group, so you can see exactly when I make a purchase and view my portfolio and positions as well. So if you're interested, link is in the description down below. And you can see here back in March, I was quite active and I deployed quite a bit of my 35% in cash that I had sitting in my account. Now, I know a lot of people that click on this video are not going to watch it all the way through. They're not going to hear me out. They're just going to see the title of the video, maybe the thumbnail, and then leave a comment down below on something like, "We're not out of the woods yet," or "This is a bull trap," or "The market is going to go back down to retest its lows." And I'm not going to sit here and deny that. This could be true. Maybe things do get worse from here and market does go back down to retest the lows. But I'm not here to speculate on the bottom, guys. I'm here to invest in great businesses, and when I see opportunities, I buy. And since the market hit its lows back in March, we've rallied over 25% from there. So potentially, the market does see the light at the end of the tunnel here. Now you can see we're nowhere near our previous all-time highs because the market still doesn't believe we'll recover back to that level in the next 6 months to a year. However, for those of you saying things like it will get much worse and we should sell our stocks and just wait, just remember we dropped 35% in the span of 3 to 4 weeks. Does that not tell you that the market has realized this? I have stated many times in my videos that the market is forward-looking, and during a regular economic cycle, it's usually a slow drawdown into a recession and a bear market. This usually lasts a few months or a few years, and it typically is painful. However, it's nowhere near as drastic of a sell-off that we just saw. This current issue was a black swan event. We couldn't have seen this coming. The market couldn't have seen this coming. And because it hit us so hard and so fast, the market started to price in like doomsday worst case scenario right away, and that's why we saw such a sharp sell-off so quick. But then once, the market started realizing things and seeing, okay, maybe this is something we can get past. We struggled for a few months, maybe a couple of quarters, but then we get past it. It started to recover, and now, like I said, we're sitting 25% off the lows. It's no secret that the economy is going to suffer. It's no secret that unemployment is going to go through the roof like we've already seen. And it's no secret that a lot of companies will, in fact, go bankrupt from this. But guys, that's all known information. That's all things that are expected. There's nothing really now, in my opinion, that's going to be as drastic as what we just saw in the last month. That could push us, say, another 40% lower from where we are right now. I think that the market is trying to figure out right now, where are we going to be in the next year? Are stocks going to recover back to where they were in, say, Jan 2020? Or is it going to be kind of a few years that it takes for stocks to recover and businesses to recover? That's kind of where the market is right now. It's kind of in limbo mode. We're not really at the all-time highs. We're not really at the all-time lows. We're just kind of in the middle trying to figure things out. But in terms of the global issue, we're actually making some good progress as to a couple of weeks ago. We're on track to developing a vaccine. Social distancing seems to be having a good effect here. And we're starting to see cases decline in other countries that were hit pretty hard in the last couple of weeks. These are all positive things. The market realizes that. And in my opinion, I think that we may have actually bottomed out on March 23rd when I created that video. This does not mean that we can see some more red days and another sell-off from current prices. And in fact, I would actually enjoy that to deploy even more cash. But what I am saying is that I think the worst is behind us. And at this point, it's going to have to be some really, really bad news to send the market back to those March lows. So is it time to buy stocks? In my opinion, if you find a business that you understand, you've done your research on, you've done your homework on that, and you find that it's actually trading at an incredibly low, undervalued price right now, it shouldn't really matter if we're in a bull market, a bear market, a sideways market. It would still be, in my opinion, a good investment. If I believe a company that I want to invest in will be much larger in the future and its current price is undervalued, it's kind of a no-brainer for me to buy into that position. However, in a bear market, the amazing thing is that even companies that will be just fine over the long term get sold off pretty drastically as the overall market goes down, as fear comes in, panic comes in. So that's when you get some great opportunity on companies that you don't typically see go on sale. And that's where, as an investor, you really have to capitalize on those opportunities. Because honestly, guys, they don't come around that often. So in short, is it still time to buy stocks? Well, I am, because I still do see some value on particular stocks out there in the market. But I will say that a lot of stocks that I did buy a couple of weeks ago during the downturn when there was peak panic and fear, a lot of them have actually started recovering, and now I don't see as much value in those companies. But on the flip side, there's thousands of businesses out there, and a lot of them are still undervalued in my opinion. But what I am doing right now, today, is that I'm starting to build up my cash position once again. So if we do see another drawdown, another sell-off, I'll have a good amount of cash to deploy back into the market and pick up even more shares of companies that I love. I wouldn't be waiting for things to get better and, for us to get past this issue, because at that point, the market would have realized that well in advance. Stocks would have recovered well in advance, and you're going to be buying in at prices that are much, much higher, in my opinion, compared to the lows that we saw in March. I see a lot of investors say, I'm just going to wait for more certainty in the market, and I'm going to wait for us to get past this issue for me to buy back in. And that's a perfect example of buying high and potentially, when the market crashes, selling low. The market absolutely hates uncertainty, and when there's uncertainty, we see incredible deals on stocks. As soon as there is some clarity and some certainty in the market, that's when we see things recover. That's when we see stock prices get elevated once again. But unfortunately, that's when a lot of beginner investors start coming back into the market. Now, if you don't believe me, that's fine. Just look at past recessions. Look at when the stock market bottomed compared to where the economy was. Typically, it's going to be when things look dark and gloomy in the economy, the stock market was like, nope, we're bottomed. We're going to start moving higher now. Investors, of course, were dumbfounded. They were like, why is the market moving higher? This time's the exact same, and this time is not going to be any different. Guys, I hope you enjoyed this video. Hope you enjoyed listening to my insight here on where the market is right now and on whether I think it's a good time to still buy stocks. Let me know in the comment section down below. I'd love to hear your thoughts on this video. And of course, drop that like to support this video, because I know it's going to get a ton of hate from a lot of bears that are still out there. Thank you so much for watching, guys. I hope you learned something from this video. But either way, don't forget to invest positively, and I'll see you in the next one.